Aloha and welcome to Java. Thank you all very kindly for joining me as always. This is for Monday, April 15th, 2024. It is tax day in the United States, so hopefully you filed those so that we can keep our wars funded. So we're going to keep an eye on our main risk indicators today. That's quite a bit that happened over the weekend. Did do a summary. So staying right under that extreme level of 300. We're keeping an eye on the relative strength of the dollar, which gained quite a bit on Friday in the fair trade over the Iran-Israel issues that were going on there. We're also watching the 10-year yield. It looks like it's continuing to rise. That will put more pressure on stocks. So everything took a drop. The fear greed gauge went down into neutral, more towards fear. However, sentiment this morning has recovered a bit. As I say here, basically, yay, the war is over, let's gamble. They've got more risk on for the moment. So Bitcoin is up. The halving is happening soon, within the next couple of weeks, is what they're expecting. And so, with everything underneath of this, the technicals and everything else that's happening, we're looking to see if this is just what we call a dead cat bounce. So, stocks were in the red as market closed on Friday. Futures are heading a bit more towards the green, showing this basically kind of recovery attitude where a lot of people are buying the dip. So, I think this could reverse and go back into the trend it was in, which is unfortunately not up. So I'm going to be sitting back and watching how this plays out. So just keep an eye on our risk factors. So going into what happened with the banks, we're not getting a lot of reports today for information that would have an effect on this. We are getting core retail sales that are supposed to give a picture of how the economy is doing, whether it's recovering. It's not highly moving as far as the markets, but we'll see what that happens is prior to the market open. We're also getting earnings, which I view as a bit more important at this moment because we're going to hear from Goldman Sachs and Charles Schwab as well as M&T Bank. So with the banks, we've got this story, the big banks' deposit cost pressures are a warning sign for regionals. So we had JP Morgan Chase and Wells Fargo both came out saying that the battle for the deposits isn't over. A reality denting their ability to earn more interest income is incoming, and regional banks likely to report similar pains and issues this week. So, with this, moving to how these rate cuts will affect them, the European Central Bank is beginning the first one to show the setup that we're going into for this next basically rate cut talks. So they're saying 3 rate cuts in 2024 and a chance of a fourth. If you factor all of those in with the meetings that they've got, they pretty much assuredly must cut next meeting. We've also got the UK adding into this, saying that they are beating the United States on inflation fight, and so they may cut rates sooner. So as we've been talking about, they have to cut at least at the same time, if not before the Fed. Otherwise, they're going to get crushed out. So both of those are setting up so that they can cut rates at the same time. They are coordinating no matter what they say because they've got this all kind of lined out with how they're going to manage the markets. So with this, we've also got a bit of a tidbit from Germany's largest federal bank. So federal banks in general not doing individual transactions. However, they're offering crypto custody services now to their basically top tier customers, is what they're calling them. But this is a setup for the central bank digital currency. So if they're offering these cryptocurrencies custody services, all they have to do once they have this set up is expand. So we'll be keeping an eye on that. They're looking at doing that second half of 2024. So we're almost there. So what are we watching? Aluminum is the first one, and it's not the only one, but it surged on the sanctions on Russian metals. We were talking about this yesterday. That's one of their main exports. Most of it comes from Russia. So if America is sanctioning them on aluminum, that is going to raise prices across the board, basically for all of American production, as well as a lot of all of this weaponry that they're doing. We need aluminum and steel and some of the other metals that they've just sanctioned. So keep an eye on that, as they said before, shooting themselves in the foot. So we've still got defense stocks set to profit from this short, basically 1 day retaliation war. But this is going to go on for a long time. They're setting up the infrastructure for long-term battles, basically. So moving over to emerging markets, we've got Apple. They're announcing investment in Vietnam. And we were talking about this before. Tim Cook visited Hanoi, and they're one of the up and coming. They have just opened up basically services in the labor in India. So I think Apple has a lot of growth behind them. They're actually quite um, behind the scenes at the moment, if you will, but they've got a lot of things that they're coming out with, just starting to recover. So I think the best thing for the markets today, for the most part, is kind of watching and seeing which direction we're going. Not financial advice, of course, but I think it's going to be interestingly volatile. So the United States came out to award Samsung $6.4 billion in grants. And this is so that they can expand a Texas chip production complex. So my question is this: Samsung is a huge company and they're doing very well with their business independently. Why are taxpayers paying $6.4 billion to a private company to expand their growth in an area that is supposed to be already expanding? That's not how business used to be done. And yes, there is the argument that they need to grow the chip sector in the United States. But that should be done through, in my opinion, through basically giving them beneficial taxation positions and other things, not spending taxpayer money to pay for them to produce, because taxpayers are not getting the benefit of this in dividends later. So this is corporatocracy at its finest and what we're growing into. What this creates is the larger companies will now be lobbying even harder in Washington, knowing that they can get these grants and funds. So anyway, this is really killing open market. So short on housing and real estate, what we're looking at is the mortgage industry is heavily affected by Airbnbs. Most of the loans that have come out recently have all been with the valuations being put on the fact that they can be rented out and the rental values. This is really going to cause a problem coming up soon. If those rental rates come down, valuations will drop. That will put a flood of basically real estate onto the market in various areas. So just want to bring that up because that's right around the corner. So Airbnb now putting out that they want to help you rent out your rental as far as your home, not just the typical Airbnb. So with the wars, global wars, I want to bring up one thing that is passing through the House. It's expected to go through the Senate. It's the FISA bill, dividing the House, basically the Republicans. So this is basically spying on United States citizens directly. So want to look into this a little bit more. You can research this and look into this. Let me know what you think about this. Basically surveillance. So with that, wish you all a wonderful day. Green day if you're trading, and I will see you all later. So until then, stay free.